It's another glorious week. Hope you all have had a great week, recoup decent returns. This video, guys, remember, is for educational purpose and is not a signal providing service. We are using our own best trading strategies, which can be found in the book that I wrote, Six-Figure Trading Strategies Blueprint, last year, which can be found on Amazon for just cheap. Click on the link down below and get your copy right now. Okay, number one, let's get started. Great week coming up with a lot of news and Q1 reports. Big banks such as Deutsche Bank, IT firms such as Amazon and Microsoft, motor industry as well. We see a lot of companies coming out and so on. GBP has reached its highest peak since Brexit, and weaker dollar seems a best bet for Donald Trump has ever made in his entire career. Let's focus on that more on this video. It was a great week to be long on dollars pairs and to gauge the durability of the dollar's rally. It is important to understand that there was not one but four main catalysts for the US dollar's recovery this past week. Number one, sharp rise and recoupling with treasury yields. Number two, softer global data. Number three, decent retail sales and optimistic beige for lack of fresh geopolitical risk. Investors were relieved that after striking specific targets in Syria, Trump did not escalate tensions further, instead abandoned plans for more sanctions. But it is too soon to be optimistic about the change in behavior as Trump turned his attack to OPEC on Friday. Calling oil prices artificially high and saying it will not be accepted. If Trump stays relatively quiet, US data beats and 10-year treasury yields edge closer to 3%. The US dollar can extend its gains. The most important thing, though, the piece of data on the US calendar will be the first quarter GDP on Friday. Before that, the calendar is dominated by housing data and a consumer confidence report. Since GDP is not due until the end of the week, treasury yields should have a greater impact on the dollar's flow. If 10 years rates break 3%, stocks could crash, leading to a broader base FX sell-off. Consumer confidence, which is due on Friday, is likely to hurt more than help greenback because sentiment will probably be dented by recent headlines risk. There's also a Bank of Japan monetary policy announcement, but no changes are expected as the Japanese is in no rush to exit from the ultra easy monetary policies. Well, euro is trading lower ahead of next week's European Central Bank's monetary policy announcement after consolidation for 8 trading days and failing to break above 1.24 throughout that time. The EURUSD finally broke down on cautious comments from ECB member Wiedmann, who is the head of Germany's Bundesbank. They say that there were recent indications that the first quarter in Germany was not so brilliant. However, on Friday, the ECB President Draghi also said growth momentum is expected to continue and their confidence in the inflation outlook increased, but the euro area growth cycle may have peaked. Euro will be the main focus in the week ahead with the central bank rates meeting. There is Eurozone PMI, there's German IFO report, and German labor market numbers scheduled for release. Since the last monetary policy meeting, we have seen more deterioration than improvement in the Eurozone economy. Therefore, we do not expect Mario Draghi outlook to improve materially this month as the German sentiment on spending deteriorates. The ECB is not ready to signal the end of QE, and they are not thinking about raising interest rate either anytime soon. If the PMI and IFO reports, which will be released before the rate decision, miss expectations, investors will position for renewed dovishness from the central bank. The risk is it's to the downside, obviously, for the euro, and dovish comments from Draghi could drive USD to 1.21. Sterling picks from this week on the back of disappointing data and dovish comments from the Bank of England Governor Carney. Retail sales, consumer prices, and wage growth all fell short of expectation, prompting the central bank governor to say, while there are areas some differences in monetary policy views, we will take them into consideration while being cautious that there are other meetings over the course of the year. In other words, he basically telling us that they have plenty of time to raise interest, but they do not need to do it in May. In response to that, next month rate hike expectation dropped from, was it 96% on Monday to 50% on by Friday, as the trend of softer data began earlier this month. This pullback in expectations and sterling are not a surprise, even if the BOE ends up being optimistic. Since GDP is not due until the end of the week, treasury yields should have a greater impact on the dollar's flow. If 10 years rates break 3%, stocks could crash, leading to broader base FX sell-off. Consumer confidence, which is due on Friday, is likely to hurt more than help greenback. Because sentiment will probably be dented by recent headlines risk. There's also a Bank of Japan monetary policy announcement, but no changes are expected, as the Japanese is in no rush to exit from the ultra easy monetary policies. Well, euro is trading low ahead of next week's European Central Bank's monetary policy announcement, after consolidation for 8 trading days and failing to break above 1.24 throughout that time. The EURUSD finally broke down on cautious comments from ECB member Wiedmann, who is the head of Germany's Bundesbank. They say that there were recent indications that the first quarter in Germany was not so brilliant. However, on Friday, the ECB President Draghi also said growth momentum is expected to continue and their confidence in the inflation outlook increased, but the euro area growth cycle may have peaked. Euro will be the main focus in the week ahead with the central bank rate meeting. There's Eurozone PMI, there's German IFO report, and German labor market numbers scheduled for release. Since the last monetary policy meeting, we have seen more deterioration than improvement in the Eurozone economy. Therefore, we do not expect Mario Draghi outlook to improve materially this month, as the German sentiment on spending deteriorates. The ECB is not ready to signal the end of QE, and they are not thinking about raising interest rate either anytime soon. If the PMI and IFO reports, which will be released before the rate decision, miss expectations, investors will position for renewed dovishness from the central bank. The risk is to the downside, obviously, for the euro, and dovish comments from Draghi could drive USD to 1.21. Sterling picks from this week on the back of disappointing data and dovish comments from the Bank of England Governor Carney. Retail sales, consumer prices, and wage growth all fell short of expectation, prompting the central bank governor to say, while there are areas some differences in monetary policy views, we will take them into consideration while being cautious that there are other meetings over the course of the year. In other words, he basically telling us that they have plenty of time to raise interest, but they do not need to do it in May. In response to that, next month rate hike expectation dropped from, was it 96% on Monday to 50% on by Friday, as the trend of softer data began earlier this month. This pullback in expectations and sterling are not a surprise. Even if the BOE ends up being optimistic, the next meeting is 3 weeks away, so further profit taking is likely. For this reason, we expect further losses in GBPUSD with a possible slide down to 1.3, and the only piece of meaningful UK data on the calendar is first quarter GDP, which is scheduled for release at the end of next week. All three of the commodity currency extended their losses on Friday. The latest Canadian economic report took USD CAD above 127, while retail sales grew 0.4%, excluding the auto spending stagnated in the month of February, causing 3-month average drop to its lowest level since 2015. Consumer prices, though, growth also eased to 0.3. These reports reinforce the Bank of Canada's cautiousness and shows off the economy slowed from the prior month. No economic reports were released from Australia and New Zealand, though, but the strength of the greenback took Aussie dollar and New Zealand dollar to close their monthly lows. For Aussie dollar, the key level to watch is 7,650. If that breaks, the next stop could be 0.7 cents, and the pair could hit the level if the consumer price growth short of expectation next week. CPI, though, is expected to accelerate year over year, with consumer inflation expectation declining, the risk to the downside. New Zealand is also vulnerable if the balance falls short, which is possible given the decline in dairy prices in March and weaker manufacturing activity. So that's it. That's my take on the Aussie dollar, all pairs involving dollar. That's my take. Also, I look at the Aussie dollar, New Zealand dollar, cable, and Euro dollar. So these are very interesting markets to look at. So guys, let's go to the why be waiting for the technical analysis. This is my best part. I love it. Let's crack on. Hey. So guys, this is EURUSD. Let me just remove the charts. Okay guys, this is what you get. This is how the clean the chart looks like. We have seen a very cool bouncing range movement price of this pair over the past almost since the beginning of the year. This range has been highly respected by this pair, which is a great deal for us, since we look at things like significant levels, we look at price actions as well. Now when you have this kind of format in your chart, this kind of structure, it gives you, it boosts your confidence and where to enter and where not to enter. Now guys, this is not going to happen early this week. It can happen at the end of the week or the beginning of the next week, but I just want to show you how cool it is. Okay, sorted why I love this trade. Also explained the significant levels. I already explained the prices, not the price action. Okay, the significant levels. Now I'm going to talk about the Fibonacci and MACD. Now if you look closely here, since from the up top here, from this correction down here, and then it bounced back to 0.61 Fibonacci level, which is one of our significant and most important level in our trading strategies. And it's going back south. There's a correction there to this lowest level is 1.22230. This is important support level for this pair. We have seen it. Why? Because we have seen more than triple bottom. We have seen triple bottom happening here. 1, 2, 3. the market is heading back there as well this week, so I'm quite confident with the market. If you look at the past weeks, I've got this market outright. If you look here, I gave a buy signal, but guys, remember this: you don't enter this market until you get according to what I wrote in the book. If you read it, you have to wait for that convergence in Mark D. If the Mark D converges like here, you see here how sweet and beautiful that was. It gives you an entry green signal that you should get into the trade. So I'm waiting for it to come here to this support level before the consolidation happens. So I'm going to buy this market, but not this week, probably next week. Let's jump on the Euro Canadian. This trade caught my attention, to be honest. Okay, let's why? Because of by the way, if you remember last time my trade look at the trades here. This was my trade here. Let me zoom in. Right, gave a buy signal here. If you guys took that trade, congratulations. I gave a sell signal here. If you guys took that trade, congratulations as well, which is quite dope. So my bias on this trade, on this pair, is a short. Why? Because of the price action. This pair has been going south for a while now, since mid-March. It's been going down, but don't enter the market yet. Just wait for it to reach the significant levels. If you look at this candlestick, there's a lot of let me go to 1 day here. If you look at the candlestick, there was a big sale happen here last week, and this kind of gives, not only for the past 2 weeks, this gives you an idea that this market will keep on going down. But yes, you have to wait for it to this resistance line for you to be able to get into the market. So don't just rush in, and just be patient and wait. What else is USD Japanese Yen? Oh, I love this trade. Because of this range here is very reliable range. So this pair broke out of this level, and it has faced some weakness on trying to get back to its normal range. After breaking this support line, it became a resistance. So we're expecting a correction from here. Why Mark D is in his Mark D is starting to converge here. The RSI is still heading up to give us an overbought signal. So we have to wait for that. As you can see here, this candlestick, it has a very big shook hook here. It gives you an idea that the market is starting to sell. So you can see there was a very high price. There was a very this was the highest opening. This is the lowest closing, and it kind of gives me an idea of the changing sentiment of the markets. So I'm gonna show this market. And the important thing is, remember my trading strategies. I always look for something that is close, at least 2 in terms of risk reward. It has been at least 2. So let's calculate our risk reward here. So for instance, if I'm going to short this market this week, this is what I'm expecting: a risk reward of 2 to the lowest level to the highest level over there. Okay, let's look at the amount you should expect. Come on, guys. All right, so this market, if I take this trade this week, and if I put my stop loss at 109. That's too far. Around here, squeeze right there. My target profit is gonna be 106. The risk reward ratio is 1.37. Not too bad. It's close to 2. Now this kind of trades I like to take, something that has high risk reward ratio, because you have to protect your capital at any cost, and that's the most critical important thing in your trading. That's the most important thing in trading strategies, risk management. So this is one of my trade for the next week. Gold has also been a very interesting market for this week. Now, as I say, like the US dollars gained strength from the past week, we expect a continuous downtrend here, and I'm going to show this market for 100%. Gold is gonna go down south to this range here, to this level, to these support levels here. So I'm expecting I'm going to show this market. Apart from that, is GBP Japanese Yen right there. I'm gonna buy this market because of this trend line here. It has been really significant line, very important. Remember, trading strategy number 1 is price action. You trade according to the trend. You trade the volumes and the momentum. The momentum now is quite south, but I just wait for the RSI to be here, to oversold, and the MACD as well to be below -0.17 to give me a confirmation of a buy. And that's it, guys, and that's it. If you look for the past weeks, I gave a buy signal here, which was really dope. It happened. So I hope you guys look at that move. Okay, if you calculate the profits guys made, for instance, if you took this trade from here to there, oops, it's here to there, up. If you took that trade, you see the risk reward ratio was 2. That was quite nice. The quantity closing profit was around it was roughly, and this is calculated like that. Okay, the profit and loss was roughly for the target, if you took this trade, was around 464 pips, which is quite a lot, depending on us on a spread betting. If it was, for instance, let's say your spread betting was 1 for this pair, which is quite common for GBP Japanese Yen, but you could have made around $400 if you took this trade. But it depends on how much you invested. But if you invested let's say $1 per pip, so you could have made 400. I normally invest 2 to 5. That could maybe 800 to roughly $2,000. So anyway, guys, that's it for today. Please subscribe on my channel. This is just something I'm doing for passion, something new to me. There's a lot of improvement coming soon, and I hope you guys love these videos. Please give a thumbs up, comment down below. I want to see your opinions, and give me recommendation. Why should I improve? If you want to see my face more oftenly, I need to get a camera, and hope you guys keep on supporting me. So thank you so much, and have a great Sunday and coming week. Make money, guys.